Hello, Peter. How are you?
I'm doing well, Chanelle. How are you?
I'm doing well. I'm doing well. So, thank you so much for joining us today to talk a little bit about the Time to Own program and your role as well in the process. So, go right ahead and introduce yourself for those who do not know you.
Sure. My name is Peter Marques, and I work with First World Mortgage. Our corporate office is located in West Hartford on Prospect Avenue. I've been in the business for 24 years, seen pretty much everything, the ups and downs in the industry. I also help a variety of clients. I help a lot with the Latino community, Spanish community. I do speak Spanish as well as Portuguese fluently. And we offer every program from your government programs like FHA, conventional with Fannie Mae, Freddie Mac. There really isn't anything that First World Mortgage doesn't have to offer our borrowers or buyers out there to help them become first-time home buyers and meet their home dreams.
Yes, thank you for that introduction. And I do want to say that I have worked with Peter, and what I appreciate about working with you is your communication. So you're excellent with communication. So you need that whether you're a buyer or agent working with a lender that has excellent communication because it can definitely make or break the deal. So thank you so much for
Absolutely.
that. And the overview of your programs that is just not that you have a wide variety. So coming to you to see about those programs will be a good first step. Now, can you tell me a little bit about the Time to Own program?
Absolutely. Yeah, that time to own program has really opened up a lot of doors for first time home buyers, especially individuals that may not have the down payment saved away or enough of the down payment saved away and also closing costs. So the time to own is offered by CHFA through the state of Connecticut. They're giving you 25,000 towards, you could use it towards the down payment as well as your closing costs. And it is forgivable. So as long as you live in the property for 10 years, you don't have to pay it back. And even if you don't live there for 10 years, each year it does reduce by 1/10 of a percent of what you owe. So that's also a positive thing, knowing that you may not have to pay back the full amount, or if you do have to pay it back at once you do purchase, it's only a partial amount. The other good thing about that is it doesn't have a monthly mortgage payment. So with CHFA, they have two options. You can choose the DAP, down payment assistance, or you can choose the time to own program. Now, the time to own 25,000 has no monthly mortgage payment, which is good, helps with the keeping the debt to income ratio lower. There's no interest on that, obviously, where the down payment assistance does have an interest rate, and there is a small monthly payment on that, depending on the amount that you borrow. Um, so the criteria to qualify for that time to own is you must have lived in the state of Connecticut for a minimum of 3 years. And there then are some guidelines as far as your income and uh, the income and so debt to income ratios and so forth that I would be reviewing to make sure that the borrower falls within that range in order to qualify for that program. But it's a great opportunity for first time home buyers to get into a home with little to no money out of pocket.
Great. Now, a question that comes up a lot, I actually had one yesterday, was they inherited a property and their name is on a deed. So that makes them not a first-time home buyer, technically, right?
Correct. Yes. If they're on title of a property, regardless if they're on the mortgage or not, if they're on title of that property, they're no longer considered a first time home buyer, unfortunately.
Okay, thank you for that clarification. That comes up a lot. So some folks think because it was just deeded to them, like through quick claim or something like that, that they still will qualify for first time home buyer, which unfortunately they don't. But so that's good to know.
And just to add one other thing too, a big misconception as well is, well, I owned a property 4 years ago. I sold it. I'm not considered a first-time home buyer anymore, correct? And the answer is no. Is if you haven't owned a property, so being on title or the deed or a mortgage, if you haven't owned a home for 3 years plus, you are considered again a first-time home buyer and you would qualify for the time to own or any of the CHFA first-time home buyer programs.
Thank you for that clarification. That comes up a lot too. Yeah, so that's good to know because people, totally block that out and think that they're not eligible. So they just don't even go for it because they think, I'm not a first-time home buyer, but you technically are now. So thank you for that, Peter. Now, if someone wants to apply and see if they're eligible, what would they do for the time to own program?
So the way that I like to work with my borrowers is, so there's an email that I would send out, and it's got specific instructions on what they need to do. It's got a link to my website where then they click on the apply now. They take the questions, answer from their background, financials, and so forth. It takes about 10 to 15 minutes to fill out. And then in my email, I also break down the documents that I need. So I do a full review, a full analysis of their financials. For example, their W-2s, their work history, their income, their pay stubs, tax returns, and so forth. So CHFA requires 3 years W-2s, 3 years tax returns. We do a deep dive, make sure that they're approved, and then I go over with the client once they're done, and we have that. We review their application, button up everything, make sure that everything is accurate in there, that we're taking advantage of every little income that they have, maybe discussing paying off some debt so that they could qualify for a little bit more. So I do a deep dive. I really like to educate my clients to make sure that they know what they're getting into, what they feel comfortable with as far as a monthly payment, how much they do have to maybe invest into the transaction. So if now they don't have maybe a lot of money, because we talk about things that are going to come up, like the appraisal cost, that's an upfront cost, an inspection that they may or may not decide to do. So little things like that. And we have that conversation so that they're prepared and they feel confident to move forward with you, Chanelle, once they go and look at homes and decide if they want to put an offer on that property. So that email is in depth, and our system is awesome too. The back end, again, it gives them a to-do list, a reminder of documents that I'm going to need to review their file, and they can upload everything into our portal securely, so they don't have to worry about sensitive information going through the internet and so forth. So everything is locked down and secure. So that would be the first step: taking that application, filling that information out, so I know everything about them, and uploading all their documents that I would need to do a full analysis, so they have that confidence when they go out with you, that when they put that offer in and they get accepted, they're going to get that loan.
Thank you for that. That was very informative in knowing, being on the back end of the process. The clients that we're working with, they are very educated on what's happening. So I do appreciate that. And we've had our offers accepted. So some people get a little nervous about, okay, if I have down payment assistance or any kind of assistance, that my offer is not going to be accepted, and that's just not really true. That's a myth. So. You can't be
And Chanel,
afraid.
that's
Mhm. Go ahead.
absolutely. And Chanel, I know you and I that we've worked together on
Mhm.
several deals. One of the things that I like to do, and you know this, is if there's ever any question from the listing agent on an offer, maybe they're just not familiar with the time to own and the DAP and the
Mhm.
CHFA program and so forth. I always emphasize strongly that pass my name along to that listing agent. Have them call me, because again, I'm the one that knows the financing part of things. Talk to me, call me. I'll give obviously as much information that I'm allowed to give about our borrower, but it does give that extra level of confidence when that offer goes in of, okay, my misconception was that CHFA is going to be tough to get a conditional approval, that they have all these extra layers of restrictions, and it's a tough, and a lot of that is all misconception, old school thinking from the real estate agents that have maybe been in the business for 20, 30 years, that CHFA has evolved quite a bit, and they've gotten rid of a lot of some, there were restrictions back in the day, but they've gotten rid of a lot of that. And I've seen that when I've had that conversation, that our borrowers, our buyers that are putting these offers in, they're getting them accepted because of that communication, and just getting rid of all that misconception that some of these agents have about the CHFA deal and time to own.
Yeah, thank you for mentioning that, Peter. That is an excellent, great step, and not everyone does that. Not every lender. So that's unique to you, which again, I love working with you because of that. But that educational piece on every side, even some agents, they just don't know. And as you said, even back in the day, there were some roadblocks, even with timing, the time to close before versus now. It's just so much quicker. It's not adding that additional time to the transaction. So, thank you for clarifying that. Now, when it comes to a borrower and a buyer, what would you recommend to have a strong mortgage application? Like, what do they need to do to prepare?
I think the key thing is, maintaining good, strong credit. I mean, we do work with individuals that, maybe have some hiccups, issues on their credit report. So not to, put any fear in that, but, and again, that goes back to that initial conversation that we have once I analyze everything, looking at their credit report, going down every little, what they have for credit history, and if there were any issues like a late or closing a file because of a collection or a charge off for some reason. Go reviewing that together and preparing again, if it's not now, preparing on, seeing if they can resolve that issue, and paying off maybe that collection, or maybe they're a little light on credit history because they just started, talking about what the little things that they can do to increase some, to have some history as well as to increase their credit scores. And these are all the pieces and education that I provide to my clients, so they're better prepared. And having that conversation of, saving up. Well, because we have time. Initially when we're getting them pre-approved, they're not going to find most likely a house this weekend. I mean, that happens, and which is great, and that's exciting. But usually we have time that they can start saving up some money, putting some more money aside. The other thing too is, some borrowers like to have cash at home, set aside case of an emergency, and they may have a substantial amount of money. And that's a conversation that we'll have in making sure that they don't take that cash and put a huge, large lump sum deposit into their bank account, because everything does have to be seasoned and sourced in their bank account, where we know where the money came from, that it's not being borrowed from someone, or that it is in fact their money, and they have access to that. So we strategize on how can we do that? How can we shift that cash money that they have at home and deposit it into their bank account? Or a lot of times I talk about using that cash at home and paying some of their bills with that cash, and naturally allowing their bank account to grow with the money that they're getting from work, depositing it naturally, the auto deposits from their jobs, and then utilizing that cash that they have, use that for now to pay the rent, pay some credit cards, pay the car loan, and so forth, and just dissolve that money that way while their bank account continues to to grow naturally, so that we don't run into any issues down the line. But they'll have time, and we talk about that. Set that money aside. The process does take about 30 days, more or less, to for the financing portion of the thing. So they have time to put aside some money and be prepared and ready to close.
Thank you for that. And when you're mentioning sometimes with time, I think some buyers get discouraged if they hear like you can't purchase right now. But when you're talking, it sounds like creating a plan that works for them and just executing a plan and then going to buy. So even if it's like a no, it's not really a no, it's just a not right now. Let's prepare and get you ready to buy.
Correct.
Right? Okay.
Absolutely. Yep.
Perfect. And that's one thing I try to remind people to not get discouraged or just count yourself out because you think maybe you have to pay off some things or save some money. You can start this process and be doing that simultaneously. So
Exactly.
I'm
That
glad.
is key. That is key. Is just that you have nothing to lose, except not being able to buy and preparing yourself. So you have nothing to lose. There's no charge for me analyzing your documentation, your application. You only have everything to gain, because now you've got a game plan. You know that you can either buy now or we'll follow up in 3 months, 6 months, or a year from now. But, not to just be discouraged and think, well, I can't do it. My credit's too poor. Or I have too many issues that happened in the past because, I've been able to help clients and they've been shocked and surprised that, oh my God,
Mhm,
I can actually
mhm.
do this and buy right away.
Yeah, yeah, exactly. You don't know until you go through the process. So thank you so much for that, Peter. Now, we're wrapping up because you answered every question that, some of my buyers had that I get a lot commonly asked questions. Is there anything you want to add before we end our call today?
Just definitely take advantage of this time to own program. It has been a success for the state of Connecticut and for first time home buyers. They've increased the amount. They've passed the amount for another 25 million that's allocated for this program. So definitely take advantage of it. It is a fantastic program, great opportunity to get into that home, utilize that to reduce the amount that they need to borrow. And, like I said, there's a combination. We can use all of it for the down payment. We can use half of it for the down payment, the other half to, pay for the closing costs. So definitely take advantage of it. It's a great opportunity, great program, and I'm proud to be part of it and offering it to the community here in Connecticut, and helping everyone get out of renting and being a homeowner, realizing their dream.
Exactly, right. So if someone's watching this today, how do they get a hold of you?
They could to give me a call at 860-913-7486. They could also email me at Marques, Marques, at firstworld.com.